Welcome to 2020. So for this month's market update, we're starting the year with a quick overview of the National Association of Realtors and what we're seeing in Bay Area. There are a couple of cities that the association has pointed out that are likely to see less than a 3% appreciation in 2020. And two of those cities are San Francisco and San Jose. The other one they noted for California was LA. And the reason is in those markets, the affordability ceiling is more or less have been reached according to the data, which we'll get to in a second. Otherwise, for the rest of Bay Area, the appreciation is expected to be a little bit higher than 3%. Usually we tend to see about 3% plus inflation, so that puts us at around 5%. That's pretty much in line with what we've seen over the last couple of decades historically from an average perspective. So let's take a look at the numbers. Now we're looking at absorption rate and the activity index. The absorption rate looks at the active homes available for sale in comparison to the homes that have sold, one divided by the other, how quickly the market is absorbing the inventory. Now, if we convert that into a percentage perspective, somewhere between 15 and 20% absorption rate, that's an iffy area. It's neither a buyer's market nor a seller's market. Once we get above 20%, it's moving really fast, it's a clear-cut seller's market. And in 2019, we have averaged at 1.8 for the absorption rate. So that's around that 15% range for Santa Clara County, and San Mateo County is slightly above that. So a little bit, things are moving a little bit faster. And once we break down the market by price point and area, we really get to see that it's the upper end market that has slowed down, and we get to gauge that differences like we talked about last month. Now looking at December, the absorption rate was 0.7, which fell significantly from the mid one, like 1.5 or so in the fall. So in December with the holidays, it's expected that the market has slowed down. However, if you look at last year, at the same time we were at 1.6. The year before that we were at 0.5. So it depends. I think last year this was fueled mainly by the low interest rates. Now let's take a look at the activity index. That's a measure that looks at how many homes are getting under contract. That gives us a better pulse on what's happening in the market right now. We don't have to wait for homes to sell, which is the first measure that we looked at. Now from an activity index perspective, we averaged the year at 2.8. That 2.8, we need to look at it in comparison for the number to make sense. And if we look at last year, we were at 2.4. The year before that, we were at 2. In 2016, we were slightly below 2. So that tells us that the market, the buyers are getting into contract. They're making decisions very fast. That's days on the market as well. Now, if buyers are moving fast, maybe they're used to dealing with multiple offers. They just got into the zone of acting quickly on the homes that they want to buy. Why is that contradicting the absorption rate, which tells us the market is kind of cooling off? That's because of the affordability ceiling. Now for San Mateo County, as I mentioned, the numbers are pretty much the same. The story is the same. Looking at the activity index, we were in 2019 at 3, coming up from 2.6, from 2.2, same story as Santa Clara County. And the absorption rate, same story. December was slow. It was much slower than last December of 2018. However, it was very much in line with December, the year 2 years before that. December is a slower month, so the underlying story is still the same. It'll be interesting to see if this affordability ceiling phenomena is going to continue through 2020, or if, usually when that happens, we see the normal market growth, which the National Association of Realtors has defined as 3% plus the rate of inflation. It's bang on where we've been historically, but we never have a 5% market in the Bay Area. It's either plus 30 or minus 30. So we shall see, but no, the sky is not falling, and let's keep an eye on it. For more information, give me a call. Thanks for watching. See you next month.